We've heard of investments like stocks, gold, real estate, and bonds. But did you know you can also invest in loans? Yes, investors actually pool up a certain amount of money to give loans to businesses to generate some returns. There are a few platforms in Malaysia who offers this product, but today I'll be talking specifically about funding societies. Usually investors will think that, these kind of investments are risky, and they're right. But funding societies just recently launched a new product called Guaranteed Investment Notes, where, as the name implies, your investments are sort of guaranteed. I'll share that more later in this video. But before we start, if you want to sign up for funding societies, use our link. I'll leave it down in the description, or you can also use the code FSTMF. You will get 30 ringgit once you invest 1,000 ringgit with funding societies within 60 days of signing up. So first of all, what is funding societies? They call themselves a digital financing platform, but to explain it a bit simpler to you guys, funding societies is basically a P2P lending platform. So what they do is they act as a middleman between investors who want to invest their money and businesses who need to borrow money. And just like every loan out there, these businesses will then have to pay an interest on these loans, and this interest will be the returns for the investors. But funding societies doesn't only act as the middleman. They also vet through these businesses to make sure they are legit businesses, I guess, and that they can pay off their loans. So I did a quick check on their website and I found that, for example, two of the criteria that a business must have to apply for a loan is that 1, they must be in operation for at least 1 year, and 2, they must have an annual turnover of at least 1 million ringgit. So it's not just any business who just, decides to open yesterday, they can go and apply for a loan on funding societies. Beyond this, funding societies also does further assessment just to make sure, that the company has a good financial track record and that they can pay off those loans. In the event of late payments or default by a business, funding societies has an in-house collection team who will pursue for payment and go and work with the businesses to see how they can help. Maybe it will be in the form of a restructuring of the loan. So I actually have experience with this with my own investments in funding societies from a few years ago, and I'll share that and what they did later on in this video. Okay, so what can you invest in? Well, obviously it's loans, but there are a few different types of loans that funding societies offer. But today, I'll be focusing on just 3 of the main ones. First of all, there is business term financing. I may be wrong, but I think funding societies started off with this product first. But anyway, it's just a standard loan that businesses may take to help with their working capital needs. So for example, the first loan that I did with funding societies back in 2018, it was a business term financing, and it was for this company that wanted cash to help expand their white sugar business. So you can find all of this stuff from their fact sheet. The fact sheet has stuff like their company summary, the details of their owners, the financial statements, their loan history with funding societies, and also the reason for borrowing this money. So you can actually check if they've paid back previous loans with funding societies, but I would assume that most of them would have, because if they don't have a good payment record, they can't apply for new loans. The second type of loan that you can invest in with funding societies is called invoice financing. So when a company makes a purchase from another company, usually they won't make payment immediately. Usually they will make payment after a certain period of time. So for example, in my previous company, whenever we bought something, whether it's a product or a service, we would pay 30 days after that product or service is delivered. So the thing is, while waiting for this payment, some businesses, especially small businesses, SMEs, they need the cash so that they can go and buy more supplies so they can make more sales. So what they'll do is they'll take on an invoice financing where the loan is backed by their invoice. They will get the cash instantly, but as soon as their customer makes payment, they'll then use that cash to settle the loan, and investors will get their money back. There's also the opposite of this, where they call it accounts payable financing. This one, instead of the seller wanting the loan, it's the customer who wants the loan. But to be honest, this one to me, it's pretty much the same as business term financing. It's just that instead of wanting the cash for working capital needs, this one, they want the cash to purchase supplies so they can go and make new products. There's also a Sharia compliant option for both of this. So the conventional products are called accounts receivable and accounts payable financing, whereas the Sharia compliant option is called invoice financing, and then in brackets, Islamic financing. So personal preference, I do like accounts receivable financing. It feels safer because the company already made the sale, they're just waiting for the customer to make payment, but this is not backed by data or anything like that. It's just what I like. So don't go and follow me just because I said what I just said. But anyway, I set up an auto invest bot for this. I'll share more about how this works when I explain how I'm currently investing with funding societies. The final one that I'll be talking about today is guaranteed investment notes. So since the last time I invested with funding societies, this is kind of the new kid on the block. I tried it 1 month ago just to make this video, and this one also has a Sharia compliant option. So guaranteed investment notes, to me, they're pretty much the same as all the other loans out there, except it's guaranteed. So there's a guaranteeing entity who will step in if the borrower is making late payments by more than 15 days. So if, let's say, you're supposed to receive a payment today, but the company doesn't pay you back and 15 days has passed, they still haven't paid you back, the guaranteeing entity will step in and make the payment on behalf. So for the previous two investment notes that I was talking about, business term financing and invoice financing, like I said earlier in this video, if the company makes payment late or they default on the payment, there is an in-house collection team who will go and pursue for payment or speak to the borrower, see if they need to restructure the loan. But at the end of the day, the risk is still on us. If the company doesn't pay, we are the ones who are at risk of losing our money. But for guaranteed investment notes, the risk is minimized. So I wouldn't say no risk because honestly, I haven't experienced one of these notes defaulting and I don't exactly know how it works in the back end. But still, the risk will be a lot lower. So you might be thinking, with guaranteed investment notes, what's the point of even considering the other options like business term financing or invoice financing? So the thing is, from my observations at least, guaranteed investment notes, yes, they are safer, but they will come at the cost of lower returns. So I also checked on the website, the other investment notes can go up to 18% returns per annum. Guaranteed investment notes will only go up to 8%, and most of the times, just based on my experience, it will be around the 6% mark. So you just have to choose based on your risk tolerance. If you want high risk, high reward, go for other options. If you want low risk, low reward, go for guaranteed investment notes. So what am I doing with funding societies? I honestly don't know why I never stuck with them in the past. Having a look at it again, doing this video, it made me realize that it is a pretty good alternative investment option for most Malaysians. So what I'm doing right now is that last month I started investing again, and I do it with a mixture of two products being accounts receivable financing and guaranteed investment notes. So how I do this is via the auto invest bot. See, I really can't be bothered going onto the website, looking for investment opportunities, picking the right ones I want, and then investing my money. If you want it, you can though. Just go on their website. You can even click on that PDF button on each investment note so you can download the fact sheet and find out more details if you want to invest in it. Anyway, my style of investing for most things is autopilot, so I'm doing the same thing with funding societies. So I set up an auto invest bot. You can customize things like how much returns you're looking for, how long you want the loan to be, and also which products you want to invest in. So like I said, I've chosen the two, being accounts receivable financing and guaranteed investment notes. If I remember correctly, I think I left the returns as default, so whatever funding society said, I just followed that. But for the tenure, I definitely reduced it to a maximum of just 3 months. So the reason I did this is that I don't like my investments being locked in. So you guys need to know this, but when you invest with funding societies, your cash is locked for as long as the loan is still running. You can't halfway through the loan say you want your money back, you want to withdraw. It's not really fair to the businesses, right? They're taking on a loan and they will pay it back according to their schedule. But since I recently went self-employed, cash flow is very important for me, so I don't want to invest and have to wait 12, 18 months to receive my money back. So I do set a maximum of just 3 months. I think it goes up to 24 or 18 months, so if that's your cup of tea, go for it. But for me, I prefer the shorter loan options. My investment amount per note is set pretty low as well, and I set it lower on accounts receivable financing for a reason. So with this, it's super important for us to diversify our investments. I put in 1,000 ringgit into funding societies, and I want to spread it out as much as possible. Since the minimum investment is 100 ringgit, that's what I set it at. You definitely shouldn't go all into one loan. So if, for example, I put the entire 1,000 ringgit in just one loan and that loan defaults, I would practically lose my entire amount. Whereas if I spread it out into 10 different loans, if one of them default, at least I have 9 more who's still working, who's still giving me returns. But for the guaranteed investment notes, I'm okay with going for a high amount, so I set it at 200 to 300 ringgit. The reason for this is, one, it is guaranteed, it's safer, so I'm not really taking more of a risk going less diversified. But the second reason is that just from looking at the investment opportunities, I noticed that guaranteed investment notes is not very common for them to be 3 months or below. Usually they're around 12 to 18 months. So since it's rarer for me to get the investment notes I want, I'm okay going for a higher amount. So what is my experience like with funding societies? I started with them in 2018 and I've made quite a few different investments with them since then. So like I said, last month, I deposited 1,000 ringgit into my account again. And the next time I logged in, a few days later, the auto invest bot did its job. The entire 1,000 ringgit was fully invested. I was actually pretty surprised. That's pretty quick. I also recently had one of my notes fully complete. They made the full payment on the 7th of October, and that amount is already reinvested into more notes again. So right now I have about 8 open investment notes, and it's a mix between accounts receivable financing and guaranteed investment notes. So now let's talk about whether the investments that I've made so far have been paid back. So I counted, ever since I started with funding societies, I've invested in 48 different notes, and of that, only 2 of them have had issues. One of them got restructured, so I think the borrower had some issues with cash flow or something like that. But anyway, the funding societies team reached out to them, restructured the loan, and now they're paying that money back. Because it's restructured, because it's longer now as well, the company is paying extra interest on this loan. I honestly don't remember what the initial tenure was because it was quite a while back, but right now it's set at 36 months and this company is now making payments on time. The other one completely defaulted. I think this company went bankrupt already, so I'm not expecting to get my money back, but at least I didn't lose so much because by the time they defaulted, they already made 7 out of 10 payments. So, I didn't lose the full amount, just a small portion of it. So one thing that I gotta say is that funding societies has been really good in giving me updates on this defaulted loan. So honestly, I haven't even checked back on it. I kind of gave up on it, but while I was doing research for this video, I realized that they've given me, I think, more than 20 updates throughout the years on the status of this loan. The crazy thing is, this loan defaulted in 2019 and the latest update from funding societies was on the 3rd of October 2023. So 4 years later and they're still chasing for an update, they're still chasing to see maybe if you can recover some of that amount. It seems like now they're waiting to speak to the insolvency department, so let's see what happens. Like I said, I didn't lose that much money, I'm not expecting to get the money back, but if I get it, then that's a bonus. Anyway, overall, I'm pretty happy with my investments with funding societies so far. Most of them have had 0 issues, I've been getting my payments back on time, and I'm getting the returns that I'm looking for. But as with all investments, please do your own research first. Don't use this as a representation of what investing with funding societies is like. This is just my personal experience. So funding societies is definitely not a conventional investment. It is very different than what we used to, and there are some pros and cons to it. In my view, the pros are, first of all, we can get slightly higher returns than what we will get from the stock markets. So like I said, depending on the loan that you choose, you can get up to 18% returns per annum. The second benefit is that investing with funding societies, there is lower volatility. So when you invest in stocks, crypto, stuff like that, the price fluctuates every day. With funding societies, you're just making a loan, look at the dashboard, it's like watching paint dry. When you get your payment back, you'll get it back and there's no real fluctuation. The third benefit is that it gives us good diversification for our portfolio. So for those of you who are like me, who invest mainly in stocks, it's good for us to have some diversification to invest in different kinds of assets. On the other hand, the cons are, 1, lock-in period. So like I said, unlike stocks and stuff like that, you can't just withdraw the money anytime you want. You'll have to wait for the loan to be completed. The second one is that there is potentially high risk because you can lose your entire investment amount. But I would say you can't really compare this risk to that of stocks or crypto or anything like that because these are just completely different asset classes and the risks are different. And anyway, like I said, if you diversify your investments in funding societies, if you spread out your money into many different loans, the likelihood of you losing your entire deposit in funding societies, I would say, is pretty low. So if you want to sign up for funding societies, use our link, I'll leave it below, or you can use the code FSTMF so you can get 30 ringgit when you invest 1,000 ringgit. Let us know, would you invest in P2P financing and would you invest in funding societies? Thanks for watching this video to the end guys, give us a huge thumbs up and subscribe to our channel if you haven't already. See you guys in the next one. Peace out.